So the world's economy is in a pretty fragile state right now, with 2020 seeing interest rates being cut to historic lows, twinned with insane levels of quantitative easing by world banks. This has led to most investable assets, such as the stock market, gold, and Bitcoin, reaching all-time highs. So what does this all mean? Well, central banks have reduced interest rates so that you, the consumer, are now de-incentivized to save, as now you're going to earn less income from your savings, thus encouraging you to go out and spend this cash in the economy to stimulate it. Central banks have also printed more money to support the economy, whether this is furloughing workers, sending stimulus checks out, or supporting the bond market. All this money printing has just increased the chances of inflation, which means that your cash's purchasing power will be less in the future. One thing that the past 12 months have told me is that governments and central banks do not have a plan for what is happening. And so there is a real risk that your family's future could be severely affected by the current changing economic tides. Therefore, being in cash right now might not be the best move, with the average UK savings account earning just £1 for every 10,000 saved. I want to share with you my simple tips for investing into the stock market at the lowest cost with the greatest diversification. Please note that this video is more applicable to UK investors, although the basic principles can be applied to people living in other countries. Number 1. Consider how much risk exposure you would like to take. Investing in the stock market should be considered as a long-term decision, so be prepared to not access your investment for 2 to 3 years. I typically like to keep 18 months of cash in the bank as a rainy day fund, and I like to invest the rest into the stock market at one time. However, you need to consider how much cash you may need for your family's current expenses. If your expenses are currently high, you might not want to invest all of your money into the markets. Number 2, find a method that will give you what you want at the lowest possible cost. The costs of what our brokers take is the only thing that you can control when deciding where to invest in the market. So therefore, you want to shop around to find a broker that is going to offer you the best service at the best possible price. You also want to consider your tax position. Now, in the UK, taxpayers can invest up to £20,000 a year in an ISA. But did you know that that ISA can also be set up within the stock market? This stocks and shares ISA can allow you to effectively invest in the stock market and ensure that all capital gains and dividends are received tax-free. Although there are a lot of free trading apps out there, like Trading 212 and eToro, I believe that it is better to pay a bit more money to get a much better service. Therefore, I recommend opening a stocks and shares ISA with Vanguard. Not only with Vanguard do you get access to a wide range of investments all across the world in various markets, but they will offer this to you for the lowest possible cost, with platform fees starting at 0.15% and individual investment fees ranging from 0.07%. This is the cheapest that I have found in the UK market. The lower the fees you pay, the more profits you will take home. Number 3, at the end. Understand what your objectives are in investing into the stock market. Are you looking for the greatest return? Then you may want to look at individual stocks. Please note that individual stocks can lose money at a faster rate, something that I learned the hard way when investing in Cyrus Minerals in 2019. This declined 50% in one day when the company was not given extra financing that it needed to continue. If, like me, you are looking for stable growth of my wealth, then you should consider investing in an exchange-traded fund, or ETF, to give you the widest range of diversification. As you can see, I have made sizable investments in 3 Vanguard ETFs, as I believe that these will give me the best returns at the lowest risk. The first, VUKE, is a low-cost ETF that tracks the top 100 UK listed companies, which includes companies such as Unilever, AstraZeneca, BP and Shell. I believe that these value stocks will be around for some time, reducing my risk exposure. However, this ETF also pays a healthy, regular dividend that you can either spend or reinvest. As it is traded in pounds, I have no direct FX exposure, something that is important to me, as ultimately my savings are in pounds. The next ETF is ticker VUSA, which is an ETF that invests in the top 500 US companies. Not only does this give the biggest levels of diversification, but you are investing in major companies such as Apple, Google, and Amazon. I personally love these companies, and this gives me a simple way to track them and not to worry about them individually. Although their dividend rate is just 1.3%, this index has seen an average growth rate of 8% when reinvesting the dividends. With the UK and the US markets covered, I want to get some exposure to emerging markets, something that I do by investing in ticker VFEM. This emerging markets ETF invests globally in countries including China, Taiwan, India, and Brazil, in such companies as Alibaba, Taiwan Semiconductors, and Bank of China. This is a higher growth ETF and thus can see more volatility, but I'm prepared to take this risk to achieve this exposure. Please note that the last 2 ETFs are held in dollars, so you do have some FX exposure to bear. Nevertheless, with interest rates being so low, I think there's really no point in having cash in the bank, as not only are you earning no income from this, but you're also opening yourself up to the risk of serious inflation, reducing the value of your cash and its purchasing power in the future. Over the next coming weeks, I will update the channel to include new ETF suggestions and new individual stock suggestions that I would like you to consider when investing in the market. But again, I'm not an investing expert, nor am I an accountant, so please do your own research before making any investments. Thank you and have a great day.